Ladies and gentlemen, good day and welcome to the India Securities Limited Q3FY22 Earnings Conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vidisha. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good evening, everyone. We have with us the management team of India Securities, represented by Mr. Kamlesh Shah, who is the Managing Director, Mr. Rajesh Gupta, who is the Non-Executive Director, Mr. Sachin Gupta, who is the CEO, Mr. Abhinav Gupta, who is the President, and also we have with us Mr. Kunal Nandwani, who is the CEO of U-Trade Solutions. With this, I'll now hand over the floor to Mr. Kamlesh Shah for the opening remarks. Over to you, sir.
Thank you. Good evening to all of you. Share India has transformed in last 2 years as a fintech service company. During the year under review, we successfully completed acquisition of 2 tech companies and integrated its operations to enhance tech capabilities. Year 2022-23 will see many products to be rolled out. Also, we saw 5 FPI joining our operations. Therefore, going forward, we see substantial growth in our revenue. Last 2 years have shown a lot of organic as well as inorganic growth. With the help of 11 subsidiaries, we have expanded our product portfolio to be recognized as a diversified financial service company. Also, in last 1 year, we have seen major reforms by our regulator, having a far-reaching impact on margin and client collateral management. We welcome all these moves. We promptly adjusted to the new requirements. This has resulted in major benefit to our growth and consolidation of our business. We believe these far-reaching reforms will boost investors' confidence as well as their presence in the market. Recently, NSE honored us with the highest award to be among top 10 companies in equity derivative segment in the presence of Honorable Minister Shri Piyush Goyal and SEBI Chairman Shri Ajay Tyagi. For past 3 years, we are dealing in centuries, that is recording 100% growth in revenue and profitability. Result of third quarter are before you. Revenue for December quarter has crossed 2,200 crore mark. Growth on year-on-year basis. Profit after tax also has grown by 177% year-on-year basis from 17.6 crore to 48.8 crores. 9-month profit is in excess of 125 crore compared to 44 crore year-on-year basis. You will observe from the December quarter PAT of 48.8 crore is more than the entire 9-month period ending December 2021, that of 44 crore. So friends, we have built a platform, a strong base to take forward our growth momentum with the help of new products and new initiatives. Over the period of time, we have focused on earning risk-free returns and smart utilization of our resources. Risk management is core business culture. It is constantly monitored and upgraded to meet unpredictable nature of our market. We have incorporated state-of-art features like stress test in our advanced risk management system. Better risk management system combined with optimum utilization of resources has made it possible to achieve a rare feat of earning return on equity close to 50%. We have a strong and visionary management team comprising of experienced leader with more than 25 years of experience and coupled with energy from second generation team to provide out-of-box solutions. we take this opportunity to thank all the employees whom we consider as a talent pool for remarkable performance. In our pursuit to remain a leading financial service company, we shall strive to protect the interest of all the stakeholders. Thank you for sparing your valuable time. Wish you safe and prosperous New Year. Now I would like to hand over to Shri Rajesh ji to give details about the NBFC business. Over to you, Rajesh ji. Rajesh ji.
Mr. Rajesh,
Hello.
please go ahead. Your line is unmuted.
Okay. Thank you, Kamlesh. Good evening, everyone. The portfolio of the company as on 31st December is 142 crores, which was 106 crore as on 30th September. It consists of mainly two segments, retail loans and SME and MSME loans. Retail loans out of 142 are 52 crores and SME MSME loans are 90 crores. We have presently 23 branches in two states, UP and Punjab. We plan to add five more branches by the end of this financial year. Number of clients as on date are more than 30,000. We have already closed successfully about 17,000 loans. So as to say, we are growing substantially in spite of the present COVID pandemic. Our net worth as on 31st December is 27 crore. Our NPA are less than 1%. We are outperforming as compared to our peers in this field. Our NIM is 7% and our ROE is 28%. That is all from my side.
Thank you, Rajesh sir. This is Abhinav from Share India. Hello, am I audible? Yeah. So hi, this is Abhinav from Share India. Thank you, Rajesh sir. Share India has always believed in offering, becoming a fintech company. We have from time to time acquired multiple companies into our fold post our listing in 2017. Our recent acquisition, as already informed by Kamlesh sir, is about U-Trade Solutions. We have Mr. Kunal Nandwani from U-Trade with us, and I would like him to introduce U-Trade to the larger audience and the investors at large. But before we get into it, I would just like to give a brief background. The idea behind acquisition of Algowire and U-Trade is to enter into retail and offer a set of products, institutional grade quality execution products, which are currently available only in the hands of ultra HNIs to the grassroots level and the retail public at large. So with this, I would like to introduce Kunal to all the investors of Share India Securities. I would like to hand over the space to him. Over to you, Kunal. Thank you.
Okay, thanks, Abhinav. So, hi, quick introduction about U-Trade. We spoke about this a little while ago as well, but recapping for all the stakeholders here on the call. So U-Trade basically is a company we started in 2011. It's been more than 10 years now. And we have been building technology for financial markets, technology that enables people to trade in the markets. So we had been building the trading systems, risk management, algo platforms, etc., in an institutional enterprise-grade software that we had been offering to players, including but not limited to retail brokers, institutional brokers, stock exchanges, and some buy-side fund managers. So we do have clients in India using this as well as outside India in a few countries. And typically our revenue split is fairly even between India and international. And we have some of the biggest fund managers in the world using our software, some of the global stock exchanges using U-Trade as a trading terminal for their end clients, some of the HFT firms using U-Trade to access some of the Indian and global markets, and some of the institutional brokers using U-Trade to trade on behalf of their clients. So that's a very, very quick introduction of U-Trade, and our team size is close to 90 people. We are all primarily based out of Chandigarh. That's where our development center is, and our clients are spread across India and outside India. So we had been building these trading technologies so far and licensing these to different institutions in India and outside India. So that's a very, very quick overview of U-Trade Solutions. So Abhinav, I hope that's sufficient. I'm happy to take any questions or add anything you would want me to.
Thanks a lot, Kunal. With this is a brief wrap-up of the quarterly earnings that the company has just reported. Now I would like to request the moderator to please open the space for any question and answer that investors might have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर.
The first question is from the line of Nitin Bhalla, an individual investor. Please go ahead.
Yeah, hi everybody. Good evening. I would like to ask, I have read on 21st of January that ESOPs you are providing ESOPs 4.5 lakh to 6 lakh shares. There it was written rupees 10, price rupees 10. That was not been clear. I would like to ask the question. Please elaborate that. Hello.
Yeah, Sachin, would you like to answer the question? Sachin ji, sir.
Hi. Good evening, everyone. Sir, Nitin sir, actually issue is that ESOPs have been issued on the performance basis to some employees, and this is a sweat equity. So this equity has been charged at base value. So no premium is charged on this equity. So that's why it is been issued at rupees 10.
Okay. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Amit Vora, an individual investor. Please go ahead.
Yeah, good afternoon, gentlemen, and thanks for taking my question. Congrats on a good set of numbers. My first question relates to all the questions relate to U-Trade only. So, what was the business that U-Trade has done for the 9 months and the profitability that U-Trade would have done for 9 months FY22? Some color and light on the future business plans of U-Trade. How are you planning to scale it up? And what is the current profile of your clients and spread? How are they between domestic and global? Thanks.
Yeah, Kunal ji.
Sure. So U-Trade's financial numbers for the year so far and the outlook for the rest of the financial year included, we are likely to do 50% plus 40 to 50% plus revenue than the year before. The profitability should be up by at least 300 to 400% because after a point our cost base doesn't go up. We do have the same 90-member team or so, and whatever additional we sell, pretty much all of that adds up to our EBIT margins, profit margins. So our profitability would be up 3 to 4 times this year compared to last year, and we've already done 2 times the profit of that we had done last year. So the numbers are looking good in terms of the
huge number. If you can give me on profitability for the 9 months period FY22.
So the profit number is close to 2.4 crores, if I'm not wrong. I don't have the number in front of me, but it's it's somewhere between 2.4 and 2.5 crores for the 9 months.
All right.
That's the profit number. And we have signed up a big client in Middle East through which our profit should exceed 5 to 6 crores for the whole financial year in the next couple of months or so. So we have decent growth from here on. So the numbers are broadly looking good. In terms of the future...
Sorry, 1 minute. Sorry to interrupt. You're saying that for the full year, the profit would be around 6 crores after signing the new contract with the Middle East client?
Correct.
For FY22?
Correct.
So we'll end the year around 6-7 crores. Is that correct?
Roughly, yes.
Okay, go ahead.
And the major plan going forward, along with continuing the institutional B2B licensing business, is our focus on building an algo platform for the retail investors. So we have been working on it for the last 1 to 2 years already, and since coming into the Share India Securities business, we have accelerated our efforts there, and we are planning to build a retail algo platform for the retail investors. So, with that, retail investors would be able to build and run their own algos or use pre-built algos by uTrade and then do variety of other features like backtesting of their ideas, trading ideas, doing some simulated trading, etc. So that will give investors access to some of the advanced tools which were only available to a handful of institutions before. And that's a major new product line coming up later in this calendar year, 2022. That's a major focus for us, the retail algo platform that will be hopefully revolutionizing the algo trading in India by retail investors.
I would just like to clarify a couple of things here post uTrade discussion. Is just that uTrade acquisition of equity was announced in September and it's effective from 23rd of November. So the consolidated results will show the profitability and revenue numbers for fiscal year 22 only from November 23 onwards, since when the acquisition has formalized. Number one. Number two, Share India Securities holds around 63.5% stake in the uTrade. So the entire consolidation will happen on the basis of the holding from that structure perspective. The entire uTrade revenue and profitability will not be added in the consolidated figures.
Absolutely. Got that. One more thing that I was looking was on the client mix, the geographical mix, if you can provide that, India and global.
Yeah, so we had started our business in India. We've done fairly okay in India. We have in total close to 40 plus clients, which are typically stockbrokers, fund managers, institutional brokers, or stock exchanges. In terms of numbers, we have higher number of clients in India, but in terms of revenue, we get higher revenue from the global clients. And that's a broad split, and it includes some of the high-frequency trading firms. It includes some of the big fund managers, institutional traders, etc. So the split is that number of clients we have more in India, but revenue-wise, we have higher revenue coming from outside India.
And the same will hold for profitability, that the profitability margins would be higher from your global clients than the Indian ones.
Correct. That's
all right. Okay, that's it from my side. If I have any follow-up, I'll get back in the queue. All the very best.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Asim from ITI Alternative Funds Management. Please go ahead.
Hi, good evening. Thank you for taking my question. My question is, sir, what is your view on the overall broking space, and would Share India be a beneficiary of the ongoing consolidation?
Yeah, thank you. This is a very relevant question. See, because the dynamics are changing for the broking space. The way the business is being done is changing very fast, and now big is beautiful. So people are, consolidating and getting into broking, which has, complete product portfolio. Plus, they have ability to provide technology support and, and out-of-box solutions and the complete product range. During last 2 years, for the entire pandemic, we have seen new class of investors which has emerged. This includes housewives, This includes IT professionals who are working from home. This includes students in higher education and traders and businessmen, who don't have any alternative mode of investing money. So all these classes have emerged as a new investors, and they are well informed and they are tech savvy. So they are going to be, easy for them to log into the system. So we have all the tech capability, and we are ready to take all these clients in our fold. As our Kunalji has recently said that, we are going to launch algo-based platform for our retail clients. So that will be a unique product. It will be first of its kind on a larger scale. So that will also help people to, be safe with their money rather than speculating in the market. During last 2 years, the market has gone one way, but going forward, it may be zigzag movement, and protection of fund and earning return, which is better than the FDR return, is of prime importance. So we are going to come out with some specific products which will meet with their requirements. So there is a big plan to go for retail in the algo space. Second thing, we have very high market share. So this will also help us, in cutting costs. Hello.
Please go ahead, sir. You are audible.
Hello.
Ladies
Kamlesh sir?
The line of Mr. Kamlesh Shah is disconnected. He's
Hello.
connected back. Thank you and over to you.
Yeah, he's back. I think, you are audible, sir.
Hello.
Sir, you are audible. Please
Hello.
go ahead.
Sorry. I mean, there was some connection issue with the line. So what I was trying to tell is that we have a very high market share, and for consolidation that is happening in the industry, the key factors that is to be looked out are the regulatory changes. There has been a lot of regulatory changes of late, and people have to have different requirement to meet the regulatory requirements. Secondly, the technology is playing a key role. During the entire COVID period, we could serve our client on a seamless manner. The third important thing for business is the transaction cost. So we are operating on a very small transaction cost because our volumes are very high. And we have complete product portfolio, we have geographical presence, we have robust RMS system, and we have capability for seamless execution. So these all are very helpful in consolidating our position in the industry. We already have 4-5 brokers that have joined their operations with us. In addition to that, during last quarter, we made 5 FPI operative on our platform. All this will add to revenue and further growth of the business. Thank you.
Thank you, sir. And lastly, what is the company's competitive advantage for sustaining business growth?
Yeah, again, this is a very relevant question. Partly we have answered in the first question, but here, I would like to be specific. The consolidation, everyone has observed that consolidation is happening in all the industry, not only our industry, and larger players are playing a major role in client acquisition. So we have competitive advantage in terms of deep technology expertise. We have cost advantage from trading cost perspective because of our volume, which is more than 9% in option segment. We get the advantage of the lower cost structure. Secondly, we have large capital pool that also helps us and brings stability to our operations. We have vast experience in seamless execution with co-location facility at the exchanges, and we have complete product portfolio. We have domain expertise. We have strong RMS system, and on top of it, we have a very strong management team. We have management team that comprises of senior people having experience of more than 25 years in the industry, that coupled with around new generation people who are robust in delivering the execution part of it. We have in all 23 people from the promoter group only working into the day-to-day business. Our focus is fully on the financial services. We have not diversified into any unrelated business. So all these points will make our company as a most competitive. And recently, as I told, we have been awarded, award by the NSE for being in top 10 derivative broker. So that is how, we are maintaining our market share and we are ahead of our competition. Thank you.
Great, sir. Thank you so much and all the best.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Akhil from Robo Capital. Please go ahead.
Hello, good evening. Am I audible?
Yes, you are.
So my question is that, you mentioned 100% growth rate in your revenues. So I just want to know, going ahead, in FY23 and FY24, what would be the sustainable revenue growth rate? Would it be 100% only?
That all depends upon the market conditions. Market is volatile. There are a lot of uncertainties attached. Right now the inflation is the biggest worry for world over, and that may make interest rate to go up. And second point is liquidity. Currently the market is driven by the liquidity. There is ample liquidity in the market, but going forward, again the liquidity may be taken off to contain inflation pressures. So there are a lot of factors which may have uncertain outlook. But to be on a brighter side, we have better tax collection, and there is a growth in GDP. GST collection is crossing more than 1 lakh for past 6-7 months. The core sector is growing very well. The tax collection initiative by central government like PLI are working very well, and taxation of corporation, the corporate results, so far whatever results have been declared by the company are all on the positive side, and we estimate around 9% GDP growth for the next year. So all in all, we have created a base. We have created a platform from where we can take off. So a lot of new people are joining. We are having a great plan for retail participation, and we have overseas business also. Plus we are focusing on institutional business, and all these products are offered through the technology platform. So we feel that going forward, we are reasonably assured of 40 to 50% growth on year-on-year basis for next 2-3 years. Sachinji, would you like to add something?
Yeah, I would like to add here, sir. Sir, the broad idea of the organization is that we just want to keep a strong hold on the current revenues and the revenue streams with that we are focusing to diversify into getting HNIs or ultra HNIs or institutions into our fold. As sir has explained that we have started business with some good HNIs or some FPIs, and we are in touch with FPIs who are based in Dubai or Singapore, and these guys are looking for good technology in India, and we are one of the preferred partner for them. So we are looking to diversify into that side. That will get us good revenue next year. Secondly, we have very ambitious plan on retail side, which will start by early first quarter of the next financial year, and we have to see that how retail thing will turn up. So idea is to hold on to this growth, but commenting on the percentage is bit difficult, as I explained. That depends on a lot of unknown things. So, but idea is to diversify and make Share India a more sustainable company. Next year, NBFC will perform bit better, and we'll try to keep our growth momentum on.
Also, I would just like to add one more point here that one of the metrics that the company internally looks very stringent level is the return on incremental capital. We believe our return on equity is already higher than what the industry average is. We intend to maintain that return on equity, and we believe that the incremental capital that the company generates from free cash flows every year would be efficiently utilized to produce a sustainable return on equity of around 20 to 25%.
Okay, fine. And I just want to know regarding the margins, going ahead, will the margins also improve, or are they going to be, in this range of 32 to 33%?
So from an EBITDA margin perspective, I think a lot of synergy benefits that were to flow from the acquisitions earlier have already flowed in. It's more about that we expect the margins to improve slightly from going ahead, but significant chunk of the synergies that we expected over the last 2 years have already played out in the financials. So margins should improve, but that would be a slight improvement from current levels.
Okay, fine. Great. Okay. Thank you so much. That's it from my end.
Thank you. The next question is from the line of Nancy Arora, an individual investor. Please go ahead.
Hello, ma'am. My question is from Kunal sir. My question is, what are U-Trade's future business plans?
So our plan is that we would like to continue providing our technology to other players in India and overseas, as we are doing right now. We've been doing for the last 10 years. We have very stable products that are being used and can be used by many more clients. The major addition to this portfolio would be the retail algo platform that would come out for all the retail investors. So that's being worked out, and later in the year we should be able to launch it at hopefully with a big scale and at a big level, and create genuine revolution in the Indian investing and trading market. So that these are the two broad things: continue our existing business, grow that, and come up with a B2C retail algo platform, which should help lots of retail investors in India.
Okay, thank you, sir.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Karan from Maximal Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are. Please go ahead.
Great. Good evening, sir, and congrats on the results. Couple of questions from my side. Just going back to a comment you made earlier about the market share in options of greater than 9% and that translating to lower cost. So just would like to understand this in a little bit more detail. If you could help me out how greater market share leads to lower cost.
Yeah, Sachin, would you like to elaborate?
Yeah, definitely I can answer. So that thing is that exchanges these days give discount over a certain threshold if a broker do a turnover beyond a certain number. So exchanges provided discounts at different levels. So once you reach highest discount level you receive once you do a 2,000 crore premium turnover in a month. So Share India is doing above around 60,000 crore turnover per month. So, more than 98% turnover is getting 40% discount over the trade cost. So that is a major discount we are receiving. So that depends on the turnover. So Share India is having major chunk out of this discount.
Okay, that was very helpful. And the second question is again relating to the broking segment as well. So from what I understand, primarily we are an institute-focused broker up till now, and planning to go into the retail segment. So could you enumerate some of the initiatives that you all are working on? As you all mentioned that in the first quarter of next year you all want to really enter the retail. So some initiatives you are taking on that front. And two, and this is more of a general question. We've seen a large number of new to market investors, over the last 2 years, joining, as you mentioned, because of the larger brokers. So would it be fair to say that these were the low-hanging fruits, and incrementally going forward, getting retail clients might get more difficult than what we've seen in the last 2 years? Thanks.
See here, we are talking about a specialized product, which is algo-based platform to the retail investors. Now, so far, algo was available, or it was privilege of select few, like institutional client or prop desk. But we want to take this algo to every household. So our motto is Ghar Ghar Algo, Har Ghar Algo. So with the algo platform, where we have competitive advantage, plus as earlier said, the benefit of transaction cost, and the in-house product. So all these factors put together will help a lot. I would like Mr. Abhinav to elaborate more on this. I thought just to make initial remark on this, and then Abhinav would explain to you in detail about the plans, retail plans. Abhinav.
Yeah, thank you, sir. So just to start with where you left, so some of the initiatives that we have already taken is that the acquisition of U-Trade equity has been done from that strategic perspective to roll out a common platform in coordination with U-Trade, wherein we can take the algo to the grassroots level. Having said that, the roadmap that we have set ourselves is that in the calendar year, in the Q2 of the calendar year, which is the Q1 of next fiscal year, we intend to roll out the first phase of our IBT product. A discount structure around broking industry would be the first phase of it. And then from there on, we will build up a product portfolio to add to the entire algo piece in close coordination with U-Trade. So the strategic roadmap that we had set ourselves started with the idea of acquisition of U-Trade and AlgoWire together. We have combined the entire knowledge transfer that we had to do from both these entities into a single entity, and now we intend to roll out a much wider accepted product for retail clientele as a whole over the coming years, but starting with the retail discount broking structure from the calendar year, Q2 of this calendar year.
Okay, understood. That's very interesting. And so just to follow up on that, I think we are also seeing a lot of the discount brokers who are also getting into, sort of smart beta strategies, passive sort of investment strategies, similarly to you, maybe algo. So any comments on how your product is different from, let's say market-wide initiatives on algo products, etc.?
Okay, so there are three parts to it that we would like to answer. In number one, the brokers that currently are offering this product, which is sort of like semi-investment products, none of the brokers are currently have the execution capability. So how a broker performs is that it's a three-party system that works. Broker is one of the entities. Second one is the execution platform, which is already outsourced. And the third one is the algo provider. So essentially, it's a transaction between the three parties and the consumer. With Share India, what we intend to do is that we want to consolidate all three entities into single entity so that the entire experience for the customer is seamless as far as the algo execution is concerned. With U-Trade, we have the institutional grade execution technology. With Share India, we have a seamless broking entire IBT piece into place. And with Share India having a proprietary trading technology experience of last 12 years, we believe we are a far much more better strategy solution provider than any other strategy solution provider in the company, because our strategies have generated industry beating returns for the last 12 odd years. So that's part one of it. Part two of it is that proprietary trading and the trading technology, as I said in the third phase of it, is that none of the brokers doesn't have that kind of structure in place where they can constantly innovate and develop new strategies. Over the last 12 years, what we have realized is the market.
The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से बात कर रहे हैं, उसने आपकी कॉल को होल्ड पर रखा है.
Hello.
Sorry for that. Please go ahead, sir.
Yeah. So over the period of last 12 years, what we realized that the market structures and the market dynamics have changed very drastically. What worked as a strategy last 12 years or last 3 years ago is not going to work today, and it will not work 3 years from now. So what you need to have in place is a constant solution innovation in terms of the kind of strategy that will work in different market conditions. Share India, with its wide trading experience, have developed that process of innovation, which a lot of brokers or any other solution provider which has been in the market for last 2 years or 3 years only doesn't have in place. So those are the 2-3 reasons why we believe we have a far much more better execution and intellectual capital in comparison to competitors as far as the algo piece is concerned.
Sure, that was very helpful. That's all from my side. Thank you.
Thank you. The next question is from the line of Saptarshi Chatterjee from Centrum PMS. Please go ahead.
Yes, sir. Thank you for the opportunity. Just wanted to know how is our client acquisition strategy, and what is the basically uses of these large number of branches?
Sachin ji or Abhinav?
Yeah. So I would just start. I would start over it, and then I would like Sachin sir and Kamlesh sir to add on to it in case I miss out on any points. So number 2, so the branches that you have discussed is essentially our legacy business. We used to be a retail-oriented broker till 2008, 2010. And it is more on an autopilot mode, which has been continuously growing. So the legacy business is still there with us, which is of the grassroots level retail clientele that has been with us for last 15 odd years. So the entire franchisee and authorized person business is because of that. So that's part 1 of it. Part 2 of it, going forward, we believe that the online business will continue to grow. The online business piece is the missing link that we had in the Share India's entire trading technology and the entire thing related to it. So going forward, the entire IBT platform would be in an online mode. The legacy business will continue as is or will grow organically at the pace that it's growing. But the entire customer acquisition strategy would be on the basis of transacting to a customer which is very new to the market. The demography which is more sustainable for the next 10 years is what we are targeting at Share India, essentially.
So, may I add? Hello?
Yeah.
Hello? May I add?
Yeah. Sachin, go ahead.
Yeah, so idea is a customer acquisition. For customer acquisition, our idea is not that we just don't want to provide a platform to the client where client can come and buy the stock of his choice. So that's the one part of the product will offer that has to be there for the clients. But what we want, we have a legacy in last 15-20 years where we have created successfully created the company over the different trading strategies and using our tech platforms. So we want to take those strategies to the mobiles of the retail customers. As Kamlesh sir has already explained, that we want the people who have capital but they don't have the knowledge to trade in the market. We want to provide them with the algo platforms on their phone. So algo is generally the term which is used for the large players, for the brokers, for the HNIs, and for the FPI clients, but not for the retailers. So we are creating a platform where retailers can participate in the market using algos, using different strategies, and the idea is to earn sustainable returns on their capital. So that is the one part. Second part is educating them about the market, about the hedging strategies, not blindly going and just buying up futures or options in the market. So the education is one, helping them with using algos is two. So we'll go with different strategy in the market, and let's see that next financial year will be totally about the retail clients. Let's see how the things will turn up.
Understood, sir. Very helpful. Just want to clarify that this entire journey of onboarding a new to trading customer and therefore giving them the platform and hand holding them, this entire journey will happen on a digital marketing and digital way, or it will be a physical touch also?
Abhinav, if you can add, please.
Yeah. So The idea is that the entire algo piece is currently a work in development. We do have some sort of strategies in place regarding it, but to be very specific in terms of what level of physical request attributes to be there is difficult to say right now, because there are certain aspects of it which are regulatory in nature. As you know, SEBI has recently brought out an algo consultation papers regarding the algo trading for the retail clientele. So we do have pieces put together wherein we can go entirely digital, and we do have pieces where we can punch in some kind of physical attributes to be there in terms of what the customer would need to be there. But the entire final strategy piece would depend on what the regulation comes around actually around it.
Just to add to this, before 4-5 months, we had a program on Z TV. That was Algo Ki Masterclass. That was done with the purpose to educate people about the benefits of algo trading. And, we received tremendous response for that. And as Abhinav has said, the work is under progress. And even from regulatory point of view, there are a lot of clarification yet to be received. But our overall marketing strategy would focus on all the platforms and whatever is permitted by the exchange as well as the regulator. So we have right product, and we will use all the marketing strategies that would adapt our clientele in a professional way, and it adds value to the client also. As I told you earlier also, the new class of investors have emerged. Now all these people are technology savvy, and they are the prime targets, so that these people would be seamlessly can log into the system and get the benefit of algo trading. Thank you.
Very helpful, sir. Very helpful. Just last question from my side, and sorry for harping this again on the algo strategy side. Is basically that you have already answered on the earlier participant why our product is competitive. But just want to know, like, which are the really conviction points for your very high confidence that this strategy, once they are launched across the retail clientele, they and most of the other brokers, large brokers, as well as wealth service providers who are also targeting this retail clientele through these algo kind of strategies, they will not be able to replicate or reverse engineer or these kind of algo strategies from those perspective, from this competition perspective. How confident, like, which are the points that give you confidence that our strategies will be really strong enough and will not be replicable?
Yeah, I think you explained, and you can elaborate more on the issue so that, the understanding is clear.
Yeah. So I would like to answer your question in 3 parts essentially. So the part 1 of it is that you need to understand that the market is changing constantly. It's a very dynamic process. So what need to be reverse engineered is not the strategy itself, but the process of creating new strategies. So any broker or any new entity that wants to come into the space might be able to, with a lot of technology in place, a lot of engineers working to reverse engineer process, let's say over a period of years, 2 years, are able to reverse engineer my strategy. But what they will not be able to do is generate the same kind of returns, because by that time the market dynamics would have changed and I would have changed or evolved my strategy as well with the time. What I have a competitive advantage is the process of creation of innovation. Any new broker would have to learn that from the ground up, what we have learned over the period of struggle of last 12 odd years. What Share India has done with toil, hard work, and done a lot of sweat over the last 12 years and developed that technology of that process of innovation is what is difficult to create for any new entity, number 1. Number 2 is the execution part of it. So, as I said, broker currently doesn't offer all the brokers that you mentioned, including the new age brokers, outsource up a lot of their OMS-based services to a third-party vendor. So essentially, with OMS being a third-party service provider, it becomes very difficult for them to create a patch over and above it, whereas the client gets a completely seamless experience as far as the algo execution is concerned. So it's not only about providing a strategy, but it's also about the entire execution piece of it, because the market is very dynamic in nature in that sense. So if let's say it's a multi-leg order strategy and 3 legs are executed and the remaining legs are not executed, so client will have a huge M2M profit or loss in that case. So the execution piece becomes a very important part of it, wherein with U-Trade coming into the fold and our proprietary knowledge base of trading strategies, we believe we have a far bigger competitive advantage in that space. Number 3, it's about handling the entire end-to-end piece and the entire customer journey in one place itself, where all the new age brokers are currently focusing more on the front-end part of it, the UI UX part of it. What Share India specializes is the back-end integration of it. None of the new age brokers have technology to handle the back-end integration and cater to algos at such massive scale that Share India has been able to do in the last 3 years. The moment there's a scale in kind of derivative strategies, the RMS structures, the operational structures, the IT infrastructure that is needed in place is a very different ballgame than what these new age brokers are used to the idea from a UI UX perspective. So that gives, all these 3 points give us a very competitive advantage, so that even if someone can, reverse engineer our strategy, the market dynamic is constantly evolving, and we are confident enough to be the first market leaders or first one in the market to evolve with the market rather than being a follower of any market leader in that space.
Yeah, and top of it, competition never bothers us. In fact, we have grown in the competition. Competition, brings out best out of you. And with the current competition, to remain in top 10 itself shows, that there are some unique strengths attached to this organization. And with the integration of U-Trade and AlgoWire, I think that capability will further enhance, and it will give us, better platform where we remain competitive and a step ahead from the competition. Thank you.
Great, sir.
I also want to add something here, sir. It's not only about providing the technology, as Binoy has explained that this is a unique combination which we don't see generally in the Indian market, that a broker is having experience of more than 15 years and a tech platform owned by the main company is having a hardcore experience of the market of last 10 years. So this is a very unique combination, and 2 type of users we foresee in the market. One, who don't know anything about the algos, they want our help or they want some professional guys' help in developing or helping them in executing their strategies. 2, people who have the strategies but they don't know how to code, but they just want the help in executing the strategies. So I tell you, we are focusing on providing a platform where people can easily code their strategy without knowing the languages like C++ or Python. Still, people can code their strategy in a simplest manner where they don't have to disclose the crux of their strategies. One, and connecting them to the sophisticated infrastructure like co-location and all. So we believe that all these things will add a lot of value to the existing customers in the market, and we are also targeting the new age customers that will come in the market in coming years.
Great, sir. Thank you so much. Thank you so much for the detailed answer, and all the best.
Thank you. The next question is from the line of Nitin Bala, an individual investor. Please go ahead.
Yeah. Hi, everyone. Right now, Kamlesh sir said that घर घर algo, हर घर algo. So you are reaching out to every housewives and youngsters. You are planning to reach out. Any numbers you had decided that like in 1 year we will reach 1 lakh of customers, retailers, or 2 lakhs of retailers like this, and how this? What are the plannings and what are the works for that you will be reaching very soon to them? You are doing.
Yes, Sachin, you can take up this issue.
Number in a year, 2 years, 50,000 lakh retailers you are reaching, and what are plannings to reach that customer? What are you doing? Like, yes, Sachin ji, please.
Sachin ji, are you on the line? Hello.
Yeah, so I'll take this question, sir. I think there's some problem with Sachin sir's line. So to be honest, sir, as I said, the entire retail piece is currently a work in progress. We are trying to bring as many products or as a quality product as soon as possible. We have already set a timeline of Q2 for calendar year to bring out the first phase of a retail product. We do have a strategy in place, but I think we would hold our horses for now to give you a specific set of numbers of clients that we are targeting in a set of timeline. But to give you a very broader aspect of the industry level, the number of investors that have come into the market in last 2 years have almost been equal to what investors were there in the market for last 12 or 13 odd years. And we believe even at a conservative pace, this number would easily double in the next 5 odd years. So, we are going into a space which is a growing industry where the customers are coming into the market. And if we are able to offer an innovative product to the customer at large, we believe the customer acquisition would not be the most important or the most difficult aspect of it. It would be the customer experience post acquisition. So as far as getting a first or headline number is difficult. I think no target is small or large enough for us. Sorry to say that. No target is large enough for us. But it's what we are focusing on is the entire customer experience, and hence we are not able to give you a correct set of numbers currently.
See, to add to this, instead of talking about the specific numbers, let us look at the universe. What is available for us to grab, or what could be the potential area where we can reach out to people? The last 3 years, the Demat account has gone up from 3.5 crore to 9 crore almost. Secondly, there are, just to give you a very simple example, LIC is coming out with the issue, and in their advertisement, they keep on mentioning that all you need is to connect your PAN number, and second thing is to open a Demat account. Now, if all the policyholders of LIC will open a Demat account, so that many more Demat account would be available. So the number will grow from 9 crore to maybe 15 crore, 20 crore, who knows. So, and secondly, we said that new class of investor is emerging. And we feel very optimistic that all these people would rather like to trade on the platform that is time tested and which can be, tested on a simulated environment for last 3 years. So in our product itself, we would be offering them, opportunity to test the strategy on a simulated environment. Now, when they see on the simulated environment, they will feel confident as to what return it can be giving. So the client acquisition, as Abhinav also mentioned, should not be a problem because of the nature of the product which we are offering and the capability which we have built over years. So rather, let us look at the larger universe than the actual numbers. As I said, ultimate plan is to reach every household. So Ghar Ghar Algo, Har Ghar Algo. Now the potential is going up, and so our optimism is also building. Thank you.
I like your that slogan, Ghar Ghar Algo and Har Ghar Algo. The slogan is very good, Kamesh ji. And what are the plannings to reach out to the customer while you will be giving ads in the TV programs and CNBC Awaz like G Business and all business channels? Or how you will be reaching to the public? See, this is our a new product and you should use it. Yes, sir.
Abhinav.
Yeah.
What are the
So,
plans?
sir, as I said, the new demography of customer that is coming into place is the demography is far much more younger than what earlier used to be. We do have an entire go-to-market strategy in place, and we were targeting all the mediums that you mentioned, plus a few more. So it would not be a single medium kind of a marketing strategy. We would go through the entire marketing space, but I think we should wait a little for at least 2 quarters, by which time we would have far much more clarity in what kind of go-to-market mediums we would be focusing more. So I think we should wait for another couple of quarters before we can very strategically answer your questions, because as I said, the entire retail piece is a currently work in progress.
Okay. It's enough now, and all the best to Share India Securities Limited, all the shareholders, stakeholders. My all the best.